Hey everyone, welcome to today's live trading session. I've got something really exciting for you all. In this session, I'll be revealing one of my biggest secrets, how I managed to make huge profits with just a single trade. Sounds interesting, right? Well, stay with me because this could completely change the way you look at trading. If you've been following my videos, you may have noticed that I often win trades with significant profits. It's not just luck, there's a well thought out strategy behind it. And today, I'm going to break it down for you step by step. I want you to see exactly how I identify the perfect trade, the logic behind my entry and exit points, and how I minimize risks while maximizing profits. All right, let's dive into the strategy step by step. This is the method I use most of the time to capture big profits with just a single trade. It's simple, powerful, and works like a charm if executed correctly. Step 1. Identify the ranging market. Before we do anything, the first thing we need to do is find a market that is moving sideways. This is what we call a ranging market. A ranging market means that the price is bouncing between a certain high and low level without making any strong upward or downward moves. You can easily spot this by looking at the price action on the chart. If the market is neither trending up nor down, but instead moving in a horizontal zone, then congratulations, you found a ranging market. We don't want to assume that the market is ranging just by looking at the price action. We need solid confirmation using indicators. That's where the Bollinger Bands and MACD indicators come in. To make sure that the market is truly ranging, I use Bollinger Bands and MACD with their default settings. Let me explain how these two indicators help us confirm the range. Bollinger Bands consist of three lines. 1. Upper band acts as resistance. When the price touches or nears this band, it often pulls back. 2. Middle band acts as a dynamic support and resistance zone. 3. Lower band acts as support. When the price touches or nears this band, it often bounces up. When the upper and lower bands are moving sideways instead of expanding or sloping up, down, it means the market is in a range. Price keeps bouncing between the bands without a strong breakout. The middle band stays relatively flat, which is another confirmation of a sideways market. If you see the Bollinger Bands behaving like this, congratulations, you've found a confirmed ranging market. But to be extra sure, let's check the MACD as well. When the signal line is moving flat instead of curving up or down, it indicates that there's no strong momentum in the market. The MACD histogram bars are small or alternating between positive and negative, showing weak price movement. No significant crossovers between the MACD line and signal line, which means there's no clear trend direction. If both the Bollinger Bands and MACD confirm sideways movement, then we can confidently say that the market is ranging. On higher time frames like 1 hour, 4 hour, or daily, finding a ranging market is difficult because price movements are more stable and clear ranges don't form as frequently. Instead of struggling to find a ranging market on higher time frames, I use smaller time frames like the 1-minute chart. Because on the 1-minute time frame, the market frequently moves in small ranges before making breakouts. This gives us more opportunities to trade rather than waiting for a perfect setup on a higher time frame. All right, now that we've successfully identified a ranging market, the next crucial step is to spot the breakout level. This is the most exciting part because a breakout signals the moment when the price is about to make a big move, giving us a chance to capture huge profits. Our job is to find that key level where the breakout is likely to happen and be ready to take action. Now, let's look at this chart. The price has been ranging for some time, bouncing between the support and resistance levels. Suddenly, the price starts moving strongly below the support level. This is our first clue that a breakout is happening, as this means we are looking for a sell trade opportunity. We don't want to enter a trade blindly. We need confirmation that the breakout is real and not just a fake out. That's where the MACD indicator helps us. When both the MACD line and signal line move below the zero level, it confirms bearish momentum, meaning the breakout is strong. I'll now draw a line at the support level so we can clearly see where the breakout is happening. If the price moves below this support level, I will take a sell position. This setup gives us a high probability trade with a strong chance of making big profits. And that's how we identify breakout levels like a pro. Now that we've identified the ranging market and confirmed the breakout, it's time to take action. I've been closely watching the price as it moves near the support level. As soon as the price breaks below the support line with strong momentum, it's a clear indication that sellers are in control. This tells me that the market is no longer in a range. It's now starting a downtrend. Seeing this clear breakout, I immediately decide to take a sell trade, because this is exactly what we were waiting for. A confirmation that the price is breaking out of the range, not just bouncing inside it. I don't hesitate here, because trading is all about reacting quickly when you see a solid setup. Now that I've taken the trade, the next step is to manage it properly, setting stop loss, targeting profit levels, and ensuring we maximize our gains while minimizing risks. Whenever I take a trade, I always set a stop loss to protect my capital. For this trade, my stop loss is at the middle band of the Bollinger Bands. The middle band, SMA 20, acts as a dynamic resistance in a downtrend. If the price closes above the middle band, it means the breakout could be failing and buyers might be taking control. Setting my stop loss here ensures that I cut my losses early if the trade goes against me instead of holding on to a losing trade. Now that my stop loss is in place, the next question is, when do I take my profits? The MACD line blue and signal line orange help us confirm momentum. As long as both lines continue moving downward, it means the selling pressure is still strong. Once both move below the zero level, it confirms that the downtrend is well established, and I can lock in my profits before a potential reversal. By following this approach, I can maximize my profits while keeping my risk under control. This is how I trade breakouts with confidence. All right, now let's take a closer look at what's happening on the chart. This is a very crucial moment in the trade because this is where many traders make mistakes. But if you understand this part well, you can avoid unnecessary panic and maximize your profits. I'm now looking at the MACD indicator, and I notice something important. The MACD line, blue, and the signal line, orange, have crossed over. This crossover usually signals a potential change in momentum, making many traders nervous. At the same time, I see that the price is attempting to push above the middle band, which is the 20-period simple moving average. This could make traders fear that the market is reversing, leading them to exit the trade too early with a small profit instead of waiting for a bigger move. Some traders, especially beginners, panic at this point and close their trade too soon just because they see a small pullback. They think, oh no, the price is going back up, I don't want to lose my profit. So they exit the trade too early, booking a small profit instead of waiting for the trade to fully develop. After a breakout, it's normal for the price to come back to retest the breakout level. In this case, the previous support level where the breakout happened has now become resistance. The price moves back up to test this resistance level, but instead of continuing higher, it gets rejected and starts dropping again. This is a strong confirmation that the downtrend is still intact and that the breakout was real. Now that we've confirmed the price is rejecting the resistance, I will continue holding the trade. My next move will depend on how the MACD behaves and whether the price continues downward. The trade has played out beautifully according to my plan. I've already captured a significant move and my profit has reached $800. The market is unpredictable and it could reverse at any moment. Instead of being greedy, I'm happy with my gains and will close my position now. Always trade with a plan and take profits when you're satisfied. Holding onto a trade for too long, hoping for just a little more, can sometimes turn a winning trade into a losing one. This trade wasn't random or based on luck. It was based on a simple, effective strategy that you can use too. First, identify the ranging market. I used Bollinger Bands and MACD to confirm that the market was moving sideways. Next, spot the breakout level. Enter the trade when the breakout happens. Sometimes traders miss the first breakout entry, and that's okay. If you didn't enter at the breakout, you could wait for the price to retest the level, which was previous support, now turned resistance. This is another great entry point, allowing you to catch the move even if you missed the breakout. And that's it. This is how you can make big profits with just one trade by following a simple structured strategy. That's it for today's session. I hope you found this strategy helpful and that it adds value to your trading journey. If you enjoyed this video, please don't forget to like, share, and subscribe to the channel for more powerful trading strategies. See you in the next one. Happy trading.